Bitcoin continues to move sideways while gold and silver hit new all-time highs. Otherwise, the markets are pretty much dead. Did that just rhyme somehow? If it did, it was definitely a coincidence. Otherwise, welcome to a new video. Yeah, Bitcoin at $88,800. What a boring weekend. Honestly, after last week, it's really not a bad thing that it was a boring weekend. But we're seeing hardly any volatility. On the one hand, that's because trading volumes, or rather, the order book is completely empty. That means we probably won't see much volatility either. We still have 1 or 2 data releases coming out this week, but otherwise it's a short trading week. Of course, that could also lead to a bit more volatility. The thinner the order books, the easier it is to move the markets with little liquidity in the end. And that's exactly what we've seen in the last few hours. Bitcoin briefly moved towards 89,500 and was immediately sold off again. We'll take a look at all of this in the next 10 minutes, including the latest news and so on, etc. But before we get started, as always, feel free to give the video a like and subscribe to the channel if you haven't already. And of course, feel free to join the free Telegram talk and Signal group. There you'll always get the latest information whenever there's something new. Or if I enter any trades, you'll be the first to know there. You'll find the link down in the video description. And if you're still looking for an exchange where you can trade everything we're talking about here, whether it's crypto, forex, or stocks, then feel free to sign up with my partner exchange, BingX. Currently, you can get up to 11,500 USDT in bonuses, and the Xmas special is still running, where you have the chance to win a total prize pool of over $6 million or win various other bonuses, or other prizes and so on. Feel free to check it out. The link is down in the video description. But now, I'd say let's not waste any time. Bitcoin at 88,800 US dollars. So what roughly happened over the weekend? There are new threats regarding Venezuela. This in turn is pushing the gold price up, generally the uncertainty. Then Trump did something in Syria again, but in the end, all of that is kind of secondary right now. What's much more important is the fact that, on the one hand, the US Consumer Sentiment Assessment of current economic conditions has declined to 55 points, the lowest level on record. Apparently things aren't really going well for the population. Not only do we have inflation problems because the inflation data was faked, but the consumer price index also doesn't really work. Banks are currently facing significant record losses of a staggering amount of 337 billion US dollars. Oh, that's unbelievable. And the global money supply is out of control. That's always the headline you keep hearing. Global M2 is going to the moon, but if you take a look at where the global M2 actually comes from, it's mostly from China and some other countries, not from the USA. In the USA, it's still a case of quantitative tightening. The money printer hasn't really been turned on yet, but in other countries it has. But that's exactly the big difference. Why the forecasts that link Bitcoin and global M2 money supply don't really work? Because Bitcoin is increasingly tracking the ISM. And right now, the outlook is much clearer that things are going to keep going down rather than us shooting straight to the moon, because the ISM is also dropping significantly. Without a functioning society, or rather without a functioning economy, Bitcoin simply can't rise much because the money just isn't there. That's the simple explanation for the current situation. And with Bitcoin, we're not really seeing much happening. The funding rates, yes, they've gone up slightly compared to yesterday. That's what we expected. And point number 2, if we take a quick look at the order books, they're just empty. Completely empty. We can see throughout the entire weekend, I kept posting the order books, or rather the delta. All week long, we had massive selling pressure, spot pressure to the upside, meaning there was no real buying pressure at all. And then when the prices pumped, it was all due to futures. And that's what we're seeing again here now, extreme futures movements over the weekend. And that's not what we want to see. We want to see spot buying volume so that the price can sustainably break to the upside. And that means for us in the short term, it's still more likely that at most, if it fits, at most for me right now, somehow into the region, here between 91,000 and 92,000 US dollars, to then make the turnaround to the downside. In the short term, we're exactly in a 50-50 situation. That means right now, in this phase, I wouldn't do anything at all. If we break to the upside, I would probably increase my short position a bit. If we go down first like this, in the area of 86,000 US dollars, I would even consider taking a short-term long position. Right now, in the phase we're currently in, nothing is happening. And the problem is, I know you can't stand hearing about it anymore, but the Japan topic isn't over yet. I'll show you in a moment why the Japan topic isn't over yet. Point number 1. If we take a look, it's unbelievable. Japanese government bonds, the 10-year ones, rose to 2.1% this morning. That's incredible. The 20-year bonds are now above 3%, and the 30-year bonds are at 3.43%. The carry trade hasn't even been touched yet. Now let's look at the Japanese yen. Look at the movement. This doesn't look like any carry trade is being unwound here. Quite the opposite. If we start to see a recovery here now, that's what we need. And it's slowly starting to happen. At least there's a small trend reversal area down here. If that happens, then we need to worry that the carry trade might be unwound in some way. Because as long as the yen is falling, even though interest rates are rising and Japanese government bonds are also continuing to rise, that's still not a sign that the carry trade is actually being unwound. That's still a risk factor, so please keep that in mind. At the moment, I would say not much is really happening yet. That's why, for now, it's the same with Bitcoin. It's a 50-50 situation as to where we go first. Unfortunately, I can't offer you more right now because we first need some movement. Since Friday, we've been moving within a range of about $500 to $1,000. That's pretty useless. There's really nothing going on. We need some kind of first mover so we can see which direction things are going. The Asia range isn't helping us right now either, even though it's currently setting the pace here. But as you can see for yourselves, we can only slightly adjust the lines from last week here. And just like that, we have this week's Asia range. So as you can see, nothing is happening. We need this first mover effect, then we can orient ourselves and see which direction we'll be heading for the rest of the days. Let's move on to the altcoins. Ethereum is moving slowly but surely upward. You can already see my sell zone up here. That's still the old one. Roughly between $3,130 and $3,200. In theory, we could also fill the inefficiency further up here. That would mean a pump up to around $3,200. So for now, this zone definitely stays in place. But even here, at the moment, just look at the price action. There's absolutely nothing going on. It's the same story with Solana. Solana is also moving slightly upward again, but the price action is just dead. The problem is right now we simply have zero liquidity in the market. If anything, there's massive spot selling and people are just longing futures. That means the leverage, yeah, I think this week options are also expiring, if I remember correctly. I think on the 26th or something like that in the crypto market. Everything between, I think, 84 to 94,000, somewhere in that range, I believe. But I don't want to say anything wrong now. But what's really missing right now is liquidity, especially spot buying pressure. And as long as we don't see that, we're just going to have big problems in the crypto market. And where is the money flowing right now? Exactly. Into the gold market, which has reached a new all-time high. We're still theoretically in an overshooting B wave. The short is still running as well. If we now see a new trend emerging that it keeps rising, I'll close the short. I'm telling you that honestly. The long is still running. Volume is slowly dropping off. Okay, but it's the same game here too. We have thin order books. So that means prices are much, much easier to push upwards. Then there are the uncertainty factors. Venezuela, what's happening in Syria again now? In general, that simply plays more into the hands of precious metals at the moment because people are going risk off. And crypto is just risk on, not risk off. That's the big problem. Let's move on to the US dollar JPY. The position is closed. But I'm currently considering also because of the yen. In fact, after this video, I'll probably open a new short position here again. The reason is simply the double top risk. We're in the intervention zone, which means Japan would have to buy US dollars again to strengthen the yen a bit and all that. That's why, for me, it's definitely the case here. New short area, I will definitely open another new short position after this video because this can't go on like this. At some point, Japan has to intervene, and that's that. The euro remains stable, and in the end, it has reached our wave 3 target. So the minimum target for wave 3 was here, and that's now been reached with the 1.618 already last week. Let's see if that was it already or if the rally will continue further. Otherwise, US indices or indices in general, DAX, Dow Jones are still at a high level. NASDAQ will have to watch how this week starts. The S&P 500 continues to move upward. Maybe we'll still get our short entry after all. But keep in mind, we have a short week ahead of us. Oil is starting to rise, of course, also due to the uncertainties. But as I said, remember, we have a short week now, probably with less volatility. But prices are easier to manipulate upwards or downwards because, as mentioned, order books are thin, there's little liquidity. And tomorrow, if we take a quick look at the economic calendar, or rather, today the PCI data might still be released, maybe because they were actually supposed to come out on Friday. So it's kind of a 50-50 thing. Let yourselves be surprised, and then tomorrow there's the gross domestic product plus the housing market in the US. So these are not entirely unimportant data, but they're also not necessarily the most important ones. And before I forget, the heat map, we have up to about 91.5 at most, still a lot of liquidity lying around. You can notice it yourself, the order books are empty. And then looking downwards. And what makes me a bit uneasy are the 70,000 down here. there are new ones there again. So we talked about it last week that they suddenly disappeared. Now there's a lot of liquidity down here again. So for us, that means be careful. Right now, it's probably best not to do anything at all. Act cautiously, secure your positions. And then I would say, yes, that's it from my side. You can also see it in the volume. The volume is just dead. But, well, that's how it is. Otherwise, that's it from my side. Thanks again for watching. Otherwise, leave a like, subscribe, and join the Telegram group. And then we'll hear from each other again tomorrow at the latest or in the Telegram group. Until then, bye, and as always, stay crypto.